Hello, everybody, and welcome to Ticker Talk for Wednesday, November 2nd. Today was Fed Day, of course, and it was a crazy day in the markets, so we'll be looking at all of that. Why don't we just get right into this here? As always, as you know, everything we do here is for educational purposes only. We are not investment advisors, and we do not provide investment advice. All statements made here are my own personal opinions, and all trading and investment decisions are your own and done at your own risk. All right, everybody here knows who I am. We'll skip right through that. And if you're watching the recording, you can go ahead and smash that like button. So we're going to take a look at the markets. We'll look at the major indices. We'll take a look at, or we'll discuss a little bit of what was up with the Fed. If you don't know yet, the Fed raised rates 75 basis points as expected, and everything was going well, and then Powell started speaking. So why don't we bring up a chart and we can take a bigger look at this. Okay. And as always, if anybody has any questions or anything, go ahead, type them in the chat or unmute yourself and feel free to ask. So here we are looking at a daily chart of the S&P 500, the SPY ETF to be specific. We've been watching that head and shoulders bottom and the breakout from it. Only got about halfway to the target before it ran into that resistance in around 389 to 390. And also that declining 100-day moving average there. So around a resistance there, took a pause. That didn't concern me at all. I mean, that was fine. That was an obvious place for the market to pause. But what is a concern is today's price action. We gapped down a little bit this morning after a down day yesterday. And after Powell started speaking, we really dumped a lot. Now we've come down to this old trend line and may have found some support there. We've also got other areas that we could expect to see support. So where did we close here? We closed, I think, around 375. Yeah. So if we extend this neckline to the head and shoulders across, that's an area that could provide some support. We've also got this 370 level, which is important level a number of times in the past. That's just below us. So that could be a good support area. And we've also got these series of lows here. Before we go and test this ultimate low, the CPI print low, we've got some more support in around the 356 area and probably also up and around the 365. So I don't think we're going to be coming crashing way down here. I think that we probably will gap down a little bit tomorrow morning and then probably find our footing in around this 370 to 371 area and hopefully get a bit of a bounce from there. It wouldn't hurt if we consolidated down here for a day or two and then started moving up out of here. This is a big shock to the system. But I think this is an overreaction. So let's take a look at intraday here. We can do a little bit of a play-by-play on this. So we're looking at a 5-minute chart. And here we are at 2 o'clock, and this is where they released the rate decision and their rate statement. And you can see we rallied on that, and we held this rally right until 2:30. When Powell started speaking, and that's when things kind of fell apart. And I'll show you the timing on a couple of these things here. Was it this one right here? No, it was this big red candle here, I think. Yeah, it was this one. On this big red candle here, what caused this big red candle, and really the rest of the move down, was when he said, talking about, he said it'll become appropriate to slow paces of rate hikes, but we still have some ways to go. Ultimate level of rates will be higher than previously expected. And that really bothered the market. And we really kind of went down hard on all of that. And, he said during the during the Q&A part of the press conference as well, he said some other stuff up and around here that the market did not like one bit. So that's why, I mean, we went down a lot. This is a big sell-off, and you can see that in after hours, we're selling off a little bit more, but not too bad. So yeah, this is going to put some shockwaves through the market for a little bit. But I don't think it's, it's a little bit scary. It's not great, but it doesn't mean that, this attempt at a recovery here is completely over. We could easily recover from this. We don't have to go and make new lows from here. But the next couple of days are critical, and we've got some really important data coming up, especially on Friday morning before the market opens with the non-farm payrolls. I think that'll sort of tell the tale. If we can bounce, if those come in okay, if we can rally off of those numbers, then I think we've got a pretty good shot. If those numbers come in really hot and the market dumps on it, then I think we're in trouble. So not out of the woods, certainly, but not completely ready to fall apart. As you'll see, and there are a couple of reasons for a little bit of optimism, which we'll take a look at here. So that's the S&P 500. Let's look at the Qs. They're not going to look quite as good. They're going to be a little less healthy looking, dropping through a fairly important support level at 268. But we do have support below 261 should be a support level there, and then eventually, either that CPI low. Let's put up a little pivot on that one. I think there's a chance that that's going to come into play, unfortunately. Okay. And I see that PISA F01 has said is 374.
It's Pearse. Kevin.
Pearse? Okay. Hey, Pearse.
So I was just curious, on that slide previously, you were talking about a support line. I wasn't sure for the SPY. Yeah. Was it like 370 something?
Yeah, so I think around 370. You mentioned 374. You were at about 375 now, and there's definitely a little bit of minor support in this area. So in the 75 down to 374 area, definitely a little bit of minor support there. It's where we ended up today. But should be better support at 370, and then some of the levels here you can see off of this price action, but mostly in around 356, and then down on this pivot here. But I think for tomorrow, maybe you missed it. I said we probably gap down a little bit tomorrow and come and test this 370 level, and then hopefully bounce off of that.
Hope so.
Yeah. So yeah, back to the Qs. I think we were done on the Qs actually. We'll move to IWM. So this index had been outperforming the other indices, but today definitely underperformed. It was the weakest of all the indices. And you can see that, and it came down through a support level. It came down through the 100-day moving average, but we've got the 50-day moving average and the 21-day moving average just below. So hopefully we see those support. We'll probably see, if that doesn't support 172 to 73 is an area you could look at for support. I don't have it drawn in here just yet. And then this 169 area here. Let's take a look at those volatility index, because now this is interesting. Okay, as much as the market went down today, it was a big down day. Anywhere from the Dow was down 1.5%, the SPY was down 2.5%, and IWM down 3.33%. The volatility index just went sideways. That's surprising, given how much we came down. And so that's a bit of a divergence. That's a reason for us to be able to have some hope that we don't, continue to plummet. Another reason for us to have some hope that maybe this is just kind of a one-day wonder on the downside, and that we can bounce nicely here, is the 10-year yield. Now, notice that this has been going sideways for a number of days. And while it did, come off the lows today, on Powell's press conference, hasn't been able to break out of this range, and I think we'll highlight this a little better because this is becoming quite important. This range in here, and you could you could call this a bit of a bear flag even. It's broken that initial downtrend. We'll get rid of that line and clean that up a little bit. We've broken that. We broke a downtrend. We broke that downtrend. Now we're going sideways. And on a day like today, with the market down as much as it was, and with this new, fresh news, the bond, you would expect the bond market to really react to. It wasn't able to break out of that range, and that is really interesting to me, because you've heard me say before that it's a bit of an axiom that the bond guys are the smart guys in the room. So if they're not moving, yields a whole bunch on this news, we've got to wonder if maybe the equity market is overreacting to this. Of course, it is still possible that the bond guys have it wrong. So we shouldn't we shouldn't run out and buy everything and celebrate just yet. They may be needing more time to digest all of this. All right, let's look at the dollar index. You can see the dollar index has started to rise. That's quite a bullish candle for the dollar here. We should expect to see more upside here. So this is a check mark against us. This is a check mark against the equity market, with the dollar index starting to move back up like this. So not thrilled to see that. Should look at gold, because gold is another one that will move on this kind of data, but it didn't do much. So that's interesting as well. Really tight day on gold here. What else? What did copper do today? Yeah, copper didn't do much. How about our general sort of commodities index? Oil was a little choppy up and down today, finished down. But our general commodities index is starting to move up out of a bit of a range. So that's interesting to see. The agricultural commodities kind of chopping around, not doing much there. We talked about wheat. We thought wheat might have a good week, and it kind of did go up for a couple of days, but it fell apart today. Big gap down on wheat. It seems like Putin might be backtracking on his "we're not going to allow Ukraine to ship any more wheat" thing. Okay,
can I bug you with a question? Since like a lot of these things they're kind of moving sideways and not jumping up a lot, kind of like how we saw in the major indexes. What do you think that says to you, like at all, if anything? I know it's kind of subjective, maybe.
Yeah, it is. It's probably a little subjective, and it's probably a little early to be trying to make any real decisions on that, right?
Yeah.
Because really, we had the rate announcement was 2 hours before the close, but Powell's press conference didn't start to half an hour after that, and the real drama in his press conference was about 15 minutes after that. So really, there was only an hour and a quarter in the equity market. After he kind of dropped the bomb, and by that time, some of these commodity markets are already closed. They would have been in electronic trading by that time, but so I don't think we've completely seen all of the reaction or the real reaction yet out of commodities.
Got it.
But it is. But they do trade electronically, right? And we're still not seeing anything in electronic. Not a whole bunch in electronic trading. That is interesting. They aren't really reacting the same way the equity market reacted, which I find quite interesting. Another thing, looking at seeing as we're looking at oil right now, I noticed earlier in the day when oil was green, that I looked at like XOP. Well, look at these, like XLE. XLE was red all day long, and yet crude oil was green. XOP, same thing. Red all day long, while crude was green, and also while natural gas was up a lot. So I found that bit of that, that little divergence was quite interesting too. But you can see it. those two ETFs had quite a red day, and it looked like they might be starting to roll over now. So that's a little scary as well, because these trades are so crowded right now. When they start to sell off, they could move to the downside really quickly. So if we're in these, we've got to be really careful. This probably wouldn't be a bad time to take some profits. Maybe keep a little piece on, because I think that, as you know, long term, I'm still quite bullish on dirty energy. We have not transitioned to clean energy yet, unfortunately. I really wish we would do that faster, and maybe everything that's going on right now is going to speed that process up. But we still need oil. We still need natural gas, and there's a supply crunch on that stuff. So, and the crunch is only going to get worse. After the election next week, they're going to start refilling that SPR. It is at the SPR is at levels now not seen since 1984. It's getting really low, which is ridiculous in my opinion. It shouldn't be drawn down that much, but anyway, I'm not going to get political here.
That's the reserve. Is that what you're talking about? Or?
Yes, yeah, the strategic petroleum reserve. Really, when that thing, when they developed that, that was partly the offset, the effect that countries like Saudi Arabia could have by cutting off oil exports to the U.S. Right? It was supposed to, okay, fine, you're going to cut off oil exports. Well, we've got enough oil to last us a while. And it was also supposed to be, what if there was a war or something like that? Well, the country would be self-sufficient. And remember, that was put in place at a time when the U.S. was not self-sufficient in energy production. That has since changed to a degree. But it has gotten political. It's being used to stabilize prices on the way into an election. And that's not what it was designed for. That's just wrong, in my opinion. But what can you do? They will have to refill it, though. And when they start refilling it, the price of oil is going to go up. That's a big part of the reason I'm bullish on oil. So I see Ken is asking, do you still feel like this midterm election will help the market for these last 2 months of the year? I know historically it has, but this year seems uncertain. It's a really strong seasonal, Ken. And I think it will. There's two things going on. Seasonally, the market does well after the midterm election, no matter who wins, no matter what happens. It just works well. The other thing that works, another seasonal as part of this is that the markets like when the power within government is split. When you have, for instance, you have a Democratic president and a Republican Senate or a Republican House, or vice versa. You could have a Democratic House and a Republican president. The market really likes that, and the market tends to rally on that. So if we make a transition, and it sure looks like we will make a transition, like the Democrats aren't going to be controlling all three anymore. It looks like they're going to lose either the House or the Senate, I believe. I'm not watching the race that closely, but that's what it looks like is going to happen. And I do think the market is going to like that. I think the market will rally on that. But for now, the big thing obviously is interest rates. When is the Fed gonna back off on rates? That's the big one that's driving the market now. But that narrative can certainly change quickly right after the election.
So much for not getting political.
Yeah, sorry. Well, I don't know.
I'm just kidding.
I think I was pretty politically on that, because
no, you were very PC on that answer. That's good.
Because the reality is that I'm pretty apolitical. I hate all of them. I think they're all terrible. So I don't have a favorite party, really. If you really want to,
I'm with you, man. As long as someone can get us out of this rut, I don't care who it is, honestly.
Yeah, in my opinion, none of them are really going to be much good for us. They're all going to try and be good for themselves.
That's politics, baby.
That's their primary function is to do what's good for themselves and to get themselves reelected, and that's really unfortunate. Maybe I was naive when I was younger, but I really think when I was younger, there were more people there who wanted to do good for the country. And I really think that has changed over my lifetime. But again, maybe I was just naive.
Yeah.
All right, we better move on.
For sure.
I'm in trouble. Where are we now? What did we look at? Oh, we didn't look at gas. Natural gas had a big green day. It's been very volatile and choppy lately, though. So I don't know. I don't know where that's going. Let's see. Marathon Oil. This is one of the plays that I had put on. I exited this position today. When we opened red and kept going down, I said, okay, that's enough. It's got earnings tomorrow, or was that after hours today? Actually, I think it was after hours today. It's got earnings after hours. I don't want to take the chance on it. I'm just curious now. I want to see how it did on their earnings. Nothing. Okay, that's interesting. That's a little surprising. Okay, so that was Marathon. So
can I ask why you picked that stock to trade?
Oh, because of this pattern here, the bull flag. I bought this actually that day on the fake breakout.
Mm-hmm.
But then it did break out. It broke out nicely the following day, and you can see, the target on this was like way up here, right? But you can see we didn't get anywhere near there. We kind of went up and got choppy and consolidated. So I mean, this was on thin ice with me because it was consolidating so much, and but it was definitely on the breakout of this. I mean, I wish I had seen this sooner, but the thing is, this just moves so fast. It really kind of gave you nowhere to get in here, right? So once it had consolidated and put in this bull flag, then you got a place to get in. You buy the breakout of that. So
were you at the top of that one red wick, that 2864? Is that your entry point? Is that what you're looking at? See how you made a line there to kind of make the flag
line here.
Yeah.
Yes. 2864. Okay. See this green candle right here?
Mm-hmm.
I bought just pennies above the high the following day.
Okay.
So 2875 ish. Let's see. I can actually check. I can tell you what the exact.
Sorry, that's a good job, track.
Yeah, it was 2875 exactly.
Nice little move.
Yeah, no, it was fine. It was fine. It just it didn't do exactly what I wanted to do, but I made some money there, and I know that there's some other people in the Discord who got in this trade as well. Mm-hmm. And they should still be profitable too. I don't know if they're out. I probably should have posted in the Discord today when I exited, but sorry about that.
Yeah, I was in this one. I was in that one, Kevin.
Sorry?
I got into this one, Kevin.
Okay, are you still in it?
No.
It's okay.
I got out. Let's see, 1, 2, 3, 4. The first red wick, or the second red wick
on this day here.
Yeah.
Okay.
I saw that right there.
Yeah, that makes sense. That is a good day to exit because it was really misbehaving then, right?
Right.
I just wanted to give it more room. I mean, I almost got stopped out on that wick. Because my mental stop was right in, I think it was around 29.42 or something like that. It was just a little ways into these two candles here, right? And it came down there, and I was watching it, and I'm like, oh, I really don't like this. Got to bounce any second now, and it did, thankfully. So I got to stay in a little longer, and I got a little bit of a better exit, because it was up in here. What's that exit? Oh, down here. Yeah, there. Right about here. 30.33 was my exit today. So again, I was trying to give it, a little bit of room, trying to give it a chance to move. But it made, I can show you intraday on this.
Yeah. No, I totally get that too. I was debating myself, whether I should just leave it in because in case it was just a slight pullback or whatever.
Yeah.
But I just been finding that just right now in the market, I've been much happier just cutting losses sooner.
Well, that was you mean, or taking your gains,
or taking my gains much sooner. Right.
That trade was a winner for you.
Yeah.
Yeah. This one, I remember when I exited now. Yeah. So in the morning it opened and it came down a bunch. It came down quick and then it started going back up. And I'm like, okay, cool. If this holds, it's great. And then when it started coming back down again, I looked at the wick on this candle. It's like, okay, no, if it goes below that, I'm out of here. And so I got out as soon as it went below that, and that was 30.33 was my exit. And then you can see, it did eventually bounce and made me second guess myself, but you can see towards the end of the day it went down again. So
is this the minute chart right now?
This is a 5-minute chart here. Yeah.
5 minutes. Okay.
So yeah, that's how I managed that trade. I'm fine. I'm happy with the way I managed it. I'm happy to be out. It didn't move as much as I expected. And I've got lots of other oil plays. I've got probably 6 or 7 different plays on. So if one of them's not performing nicely, not performing the way I expect, I don't need to hang around in it. All right, let's go back to the daily here. What else do we want to look at? TAN didn't do anything. Yeah, we'll blast. I don't think I'm going to go through all the sectors. Let's take a look at industrials, because industrials is a sector that has been outperforming. So this is an ugly red candle in there today. A really nasty, a nasty reversal candle, and right at the 200-day moving average too. So that's not good. But I will say that industrials did outperform the market to a degree, and the Dow Jones really outperformed the rest of the market today. So this has got a nice trend line still. There's still room for this to come down and then bounce off of this trend line. I wouldn't be too concerned just yet on that. It is one of the stronger sectors right now. Let's take a look at technology really quick. Yeah, that fell apart, although it did. Look where it stopped, right at support, which is right off of this pivot back here. This is TA in action right here, right? Now, does it hold there for tomorrow? I don't know. It's tough to say. This is a nasty couple of red candles after sort of breaking this brand new uptrend. Does anybody want to look at any of the FANGs specifically? If you do, we can look at those. Otherwise, I'm going to skip right over all of them, I think, because they all kind of did the same thing. What else? Healthcare is one that has been doing well. Let's take a look at that. Okay, that's not so bad. It's an ugly red candle, but compared to some of the ones we've looked at, it's not too bad. Still above its 200-day moving average. So, on another down day, we would want to watch that for support. It's 130 level, just because it's a nice even number, big even number, and also we've had a lot of volume at that level. So yeah, we should be looking for a bounce right there in the healthcare sector. What else? So utilities strongly outperformed the market today. We'll look at that. But you can see we've still got this nasty reversal candle, but it's supported right at this long-term uptrend that it had cut through. So this uptrend was from basically post-COVID. It cut through there, it went back up. It seems to be acting as support so far, but again, expecting the market to gap down tomorrow. One more for me, and I think it was NS, wanted to look at HEES, H&E Equipment Services. I don't know specifically what they do, but I know he bought into this. I think he bought in down here on this little breakout. He might have got in even better than that. I know he had a great entry. It was a good trade for him. And nice move up. I think he took some profit up here. Yeah, so what do we got going on? Yeah, I guess this 40 level. I mean, 40 is obviously a psychological level. Not too surprising that people were taking profit before that. It's good. Wow. Yeah. Okay. All right. Yeah, I can see why it. Can definitely see why it paused coming into that 40 area. There. Okay. Yeah, you can see anytime it's gone through 40, it hasn't spent a lot of time above 40. You know, way back in the past. And when are we here? 21. It did. I mean, it got up there and it held fairly nicely above the 40 level in here. But once he broke down again, I think it's going to have some trouble getting back up through that. You know, that 40 level is really important. So not surprising to see it turn back, and even some, you know, some traders front running, you know, the profit taking on that. Not surprising at all. But, you know, it did have this really strong move. So let's see if we can get a consolidation. Let's see if we can get a little bull flag like this. Now, obviously, this bull flag in here failed, right? It tried to break out of there, and it just, you know, it fell back down. Let's see what happens with this one. You know, is this just going to roll right over now, or is it going to consolidate sideways? I think past behavior in the stock sort of suggests it's going to consolidate sideways. You know, maybe build a bit of a base here, you know, something like that, and then try and break out. I think that would be kind of ideal. Doesn't have to be like, you know, 2 or 3 weeks long like this one is, but I think some sideways action is due on this stock. But, you know, can certainly be played on a breakout if it did put in a consolidation. In a perfect world, though, the consolidation would be tighter than this. This is fairly loose. What are we looking at? You know, almost, yeah, $2. You know, if it was tighter, if it was a buck or a buck and a half, that would be better. But, yeah, keep an eye on this. You know, put some alerts, top and bottom of that consolidation, maybe. Because this has shown us it can make big moves. They usually tend to happen after earnings, but yeah, worth watching. All right, that's everything I've got. If any of you guys have anything you want to look at, you know what to do. You can either unmute your mic or you can type your tickers into the chat. Let me know what you want to do with it. Yeah, is there anything you want to look at?
What's up, Kevin?
Hey, Justin.
Hey, I was wondering, could we look at LC?
We certainly can.
LC's so my story with LC, it's just one of those I started a position with the with LC like at $13.
Okay.
And now I'm looking at the chart and it like kind of dropped as far as it did. And my question is like, what do you do when you like, I feel like there's not a lot of information at this point when you're looking at the chart of like,
right. Because
you know, like usually there's like a setup or a consolidation or something, but I feel like this one is kind of like such a big fall from like what it's been doing lately. How do you like read that?
Yeah, so we can look back into the past, and obviously I mean, we're only going back to 2020, so that's not too bad. But, you know, generally the farther you go back into the past, the less effective it's likely to be.
Yeah.
But, you know, the first thing I see when I do that is I see a level. I've got the crosshairs on it. I see a level that, you know, has had a fair bit of interaction. And, you know, it's close to where we are now. So we definitely want to draw that line in.
Okay.
So if you look back, you know, you can see here. Actually, I want to raise that up just a bit. Yeah, so you can see that, you know, kind of acted as support. You know, I mean, it got a little loose on it. It's not perfect.
Right.
But, you know, we're a little below it here. We're a little above it there. We're a little above it here. And we had some price interaction right there. So we've got, you know, 1, 2, 3, 4, 5, 6 times on that. And now we're coming in for the 7th time. So this is a decent level, 946, 950. It's kind of an evenish number. so that's, that is the next area you're going to look for support. Also look back here. So look at this low here, right? There's a pivot right there. That's around 820. And you can see that there was a little bit of interaction with that level back here as well. So there's no reason we couldn't draw that one in. But I really want to key off, I've drawn it all the way back to here, but the important part of that is right there. So I want to get that like right on the money. So I'm going to zoom in there and look at how, look at the price action when it came in there. Yeah, okay, so I like exactly where I've drawn that line. So that's at like 818. So I'll go back into the present. And, that's just below. That's pretty much all we've got to work off of, right? The other thing we can work from is some of our other indicators. We can look at the RSI down at the very bottom. We can also look at volume. It's interesting that look at this volume here when it was up in this area, and now we've got some big red candles, and they've got lower volume on them. So that's interesting. That sort of suggests that maybe, it went down, and it went down a lot. But there wasn't a ton of selling pressure there, and it could just be a lack of buyers right now because people are nervous in this market, right?
Right.
So when buyers do come back in, it could go up quite quickly. I also want you to notice the RSI. Look where the RSI is right now, and that is 33. Yeah, the RSI is at 33 today. But take a look back here at these lows, and the RSI was down lower. But price is lower now, right? So that's a tiny bit of a divergence. So that also suggests that this may not go down much further. So yeah, that's kind of what we've got to work with on this right now. But it's not it's not a lot, right?
No.
There is a lot of white space here.
Yeah.
But at least we were able to find a couple of levels. It's worse when like some of these D-SPACs, former SPACs, when they break below 10.
Yeah.
For the first time, then you got nothing. There's
right.
Nothing.
Yeah.
But at least with this one, we do have some levels from the past.
Yeah.
So just got to remember, you got to remind yourself once in a while to look left, look way
Like
left,
further back, right? Okay.
or go to a weekly chart, to get some of your levels, that sort of thing. Yeah, it's easy to forget to do that too, right? We can get so focused on what's going on right now and zoom right into this, right? But important to remind ourselves to look back.
For sure, yeah, and it's also like one of those like positions that you tell yourself mentally that it's like, oh, it's going to be a long-term position, right? And then next thing you know, you buy it. Like I said, I got it around like $13 or something like that, and then you find yourself you're down 27% because it dropped like $3, and it's even for like a long-term position. I'm just trying to figure out, like I see. There's always kind of like that like ride or die mentality that happens a lot with long-term investors. Yeah. But I'm starting to learn that maybe you should still have a line somewhere.
Yeah, I do think you have to have a line somewhere.
Yeah.
I don't know. I mean, this is something that I've been battling with my whole investing career, because I know that in most cases, if you just hang on, if you, like you said, you ride or die, and even sometimes if you average down, that in the long run you do better. But it is just so difficult to do.
It's true, yeah.
And I guess this really depends on your personality. I think that's what it comes down to. For me, it is so demoralizing to see these positions that are deep in the red for a long time. I hate it. And it affects me, and it affects my short-term trading. If I have,
it gets harder too when you learn a little bit of technical analysis, and you see like it's probably going to keep going lower.
Yeah,
exactly.
And I've tried to, to be the good investor and to stay in, and it just doesn't work for me. So
Yeah.
I've got to at some point get out, and if I had been, let's say, I don't know, let's say I had bought it way back here in, when are we looking at? November of 2020. If I had bought this breakout, I would have want to stayed in, but what did we get up to here? 14, and it came back down to 9 and a
Yeah.
half. That doesn't look like much in the grand scheme of things here, but
Yeah.
even, that's a big move, right? That would have been hard for me to stay in. I
It's
might
kind
have,
of one of those things too, where you can't argue with price. I think I'm finally realizing what that means. It's a saying that I've like read in many places, but yeah,
yeah. So this is one of the things that makes it so difficult. So yeah, so it had this big pullback. It went from 14 to 950, but then look what happened after that. It went from 950 to 22 in 2 weeks. So this is a volatile stock, and definitely something for an investor to be in. Because after going to 22, what's it do? It pulls right back again, and it doesn't. In a couple of months, it's back down into 12. So yeah, this is one of those companies or one of those stocks that is really difficult to be an investor in, and probably one where you have to say to yourself, okay, this is ride or die.
yeah,
But you might not have known that coming into this, because really it didn't get volatile until after this consolidation. And it's been pretty volatile like that ever since. We had another one of these consolidations recently, but as you can see, we keep breaking out to the downside of these consolidations. So yeah, I mean, how much further does it go?
yeah. And I was also thinking too. It's like if you're trying to like trade with the trend, like if you're a long-term investor, you would hope there's like a long-term uptrend.
Yeah, well, yeah.
And I think just right now, maybe it's just not the time for long-term investors.
So yeah, so okay, so the point I was going to make when I sort of looked at this, and trying to think like a long-term investor who's also a bit of a trader, the thing you can do is, I mean, when you get into an investment, you can draw trend lines. When you look at you look at your long-term moving averages as well. So what you're going to draw, if you're going to draw trend lines in this, assuming you got in here, right? You immediately, the first trend line you draw is probably going to be to there, maybe here or something. Then you're going to go here, and it's like, okay, well, that broke. It's like, well, that's not a big deal, because that's a really steep trend line, right? So you almost have to expect this trend line to break, because you had a really nice move. You had this nice run up, but it's pretty steep. So it breaks, but you got some support levels, and that the first of these support levels actually held, so that's good. All right, so it moves up. So now you're gonna now you have to adjust your trend line. So you're gonna adjust your trend line to here, and now it's looking like a more reasonable trend. But you're not gonna you get this action, you're probably not gonna actually. Let me get this fib off of here, because this Fibonacci line is useless now. What is it? Yeah. And you're looking at this, and on the break of this trend line, you're probably still not that concerned, because you've got a really nice profit, and the trend line's still pretty steep. You've got some decent support levels here, because you'd be looking at all this price action and getting support levels off of that, and sure enough, it held, right? So it's like, okay, and that starts moving up, so we adjust the trend line again. You adjust your trend line to here. You probably don't like this little sideways. When you get into that, you're like, how many more times do I need to adjust this trend line? And you should be sort of questioning things by then, but it gaps up on earnings, and it keeps going. So now you've got this trend line. So you got to look at this trend line and go, okay, now this is becoming a long-term trend line, right? I started drawing that trend line in end of October. And where are we here? So yeah, this trend line is getting close to a year long. So that's a trend line. You got to say to yourself, okay, I kind of need to respect this trend line, right? So you come up here, you get this action, you get toppy action. And when did this happen? This happened at the end of 2021. There were starting to be some concerns about the market then. This wasn't the only thing that started rolling over. And then you start breaking down through all these moving averages. And when you get down through the 100-day moving average and your trend line is here, you're like, oh, this is really right here, probably where you should get out, right? This should kind of be your line in the sand.
Yeah.
If you don't get out there, when it breaks down through the 200-day moving average right here, you should probably get out there. You know, that is kind of that's the last line of defense, is that 200-day moving average. It's really important because a lot of institutions won't, you know, the institutions have probably exited before that, but a lot of institutions just will not buy any stock that's below its 200-day moving average. So that takes a pool of buyers away once it's below that. And investors, you know, a lot of investors just have that rule as well, that if it's below the 200-day moving average, I don't want it. So they may be getting out there. It's surprising when it broke through there that it didn't, like, you know, come crashing down a little bit. It took a while. But you notice here, though, you notice how you get some acceleration to the downside as soon as you break this trend line.
Yeah.
So
yeah,
people were definitely watching it here. It acted as support. Look at how a few days before it actually broke, it acted as support. You had one little gap up day, and then it started to roll over again. So as an investor, this is the kind of technical analysis that you should be doing. This is the long-term technical analysis. And this stock, this chart gave us plenty of clues that it was time to get out.
Got it.
Assuming you had gotten in back here.
Right.
Well,
you know,
if you'd gotten in up here,
it's tough. Yeah.
Well, yeah, but you still should have been drawing this trend line. You still should have been looking at all these long-term moving averages, you know, and going up. And you also should have gone, okay, look at this thing has had a run of, this thing is stretched. It's had a run of 950%.
Right.
If you're getting in, or even here where it's only 600%, if this is where you're getting in, you've got to look and go, okay, this thing is up 600%. I've got to put a really tight leash on this thing. So same again, even if you got up, you know, if you got in here, then you got to be looking at this and going, you know what, I got to stop out here. I just got to take this loss because it had run up so much. So.
Hey. No, that was very helpful. I appreciate that. Yeah, that's awesome.
Yeah, hopefully that helped some other people too, and people that are
yeah. So I ended up getting in July this year, so it's just been straight down ever since.
Or yeah, I mean, look at this is bottoming action in here.
Yeah, that's what I thought. You know, I thought it might be a good time to jump in.
I don't blame you for getting in on that. You know, you got your low, you got another low, you come in, you make you know, a higher low, and then you confirm the higher low with this in here. By mid-July, that'll confirm that higher low. That's, you know, anywhere in here is kind of not a bad entry, but it also needs to be, you know, with the way the market has been and stuff, you know, even as an investment, I think you kind of gotta find a place to put stop. And stop out with a small loss on your investment, but keep an eye on it. Obviously, you know, you're an investor, you like the company, but go, okay, you know, I've gotten, you know, if you got in somewhere in here, I don't see why you wouldn't put a stop loss, say at 1250. You know, this pivot here. And as it sort of rolls over and starts coming back down, I mean, that's where you kind of got to say, no, that's enough for now. And then as it goes back up through that, and maybe up through this trend line here, then maybe you could rebuy it. Yeah, I mean, it was a good try, but it wasn't ready yet. That's all.
Yeah, no, I agree. Yeah, no, thank you for that. I appreciate. Yeah, I think definitely would have stopped out sooner. And then, like you said, I always forget you could always buy back in.
Yeah.
That's another thing, but cool, Kevin. Appreciate it.
Yeah, you're welcome. All right. So anybody else got anything they want to look at? Marvin, you've got always got something on the go. All right, I guess I'm not seeing anything going in the chat. I'm not hearing anybody.
Hey, Kevin, sorry about that.
No problem.
I stepped away for a second.
Okay.
Because I had to feed a hungry puppy. But actually, I would like to hear your thoughts. So actually, I've been looking at this company called ANET.
Okay.
Which is like a software company. And so I'm looking, I like that gap, and I want to play that gap.
So is it Arista Networks?
Yeah, Arista Networks. Yeah, they have this. So looking at the day chart, like right after the earnings piece, like they had this huge gap up, and I was like, oh, that got to come fill at some point.
Yeah.
So I'm looking at I was looking at playing some puts, and then given what happened in the market today, I was like, oh, could this be the catalyst that helps?
So are you talking about this gap back here?
No. The recent gap back, literally a few days ago. If you keep
that was a nasty gap and it did get filled.
Yeah.
We're talking about this gap. All right, let's get that in there. Yeah, we'll start with that.
Yeah. So looking, looking to see based off of I got, I was like, I should swing some puts. So because it's gonna come down. And it started to today, of course, with the market. And of course, the candlestick that it made today to me, I don't know if it'll fill it completely by the end of this week or not, but I got some puts that are really far out. But yeah, I was like, I just want to play this, not that big gap. Yeah, but it looks to be a good, healthy company that at some point I probably might want to consider looking into. But I was, that gap was like, oh, yeah. Yeah, let me just see if it's I know it's gonna feel it. So yeah, that's what I've been kind of eyeing and looking at that. But it definitely looks to be a really good company. I think had probably, I imagine it still would eventually at some point was gonna fill that gap, but I imagine had probably the way the market responded differently, or had news probably been differently, it probably was going to try to test those highs again, I felt like, because it was really some really strong price action movement in the past couple of days on it. But
yeah, it's I don't know if you even bother drawing that line in, but that 90 level's important. That one a little bit, not so much. Something going on here though. Here, it's gotten a little messy. It seemed it was better behaved before. You can see where that topped out, and then came back and tested it when it did this here. That's pretty good behavior, but it didn't really play much on that this time. It's found different levels, and there was also another a shorter trend in this, I think, here from here. Yeah,
and it kind of looks like it's forming that downward trend from the top.
A little bit, but again, that one's not awesome.
It's not defined,
do you go from here like that? Well, that's almost useless, right? I think and quite often, I know I've mentioned this before, but quite often I find that the initial, the major peak, right, doesn't always work for taking a trend from, right? And you can see, and the other thing too, right? I normally I don't like cutting through price, but this is our COVID crash right here, right?
Right.
And that one I don't mind cutting through. And I've noticed that this little pullback that we had in, in this stock, it was in September, and other stocks it's sooner. The trends from the pullback after the pop after COVID, starting a trend from there works well.
Okay.
So that's why I connected. You can see I connected that one to that pullback there, and didn't go and didn't go down to the bottom of that COVID crash one to get this trend line. So yeah, I mean, we've got some half decent trend lines. There's been some interaction with those trend lines, so that's good. But you're more concerned right now. I mean, you're just basically, I guess, you're trading this.
Yeah.
Right. So you're looking at what's. Yeah, I mean, you've got now, you've got failure at the third touch of this trend line, right?
Right.
So, or I guess it's the second, because the trend line starts there. I guess it's just the second touch. But anyway, we've got 3 points on this line, and so that's basically what makes a trend line.
Right.
So yeah, and maybe you might have got lucky today though. With J Powell might have helped you out. You're the only guy in this market who J Powell helped.
Probably. I mean, I've been watching it, and I was just like, it was strong, or at least even just looking at that. I'm sorry for this thirsty dog over here, who's washing down his food, but. That was a crazy move, even from, I guess that was October. When was that? What day was that? Just trying to zoom out here. What day was that where it really had that spike? I mean, yeah, from Thursday, the 13th or so, around those lows, and then even move. Yeah. That's a nice strong move, and so I've been watching it for the past couple days. I'm like, it wants to itch up, and then today it was like, I said it has to fill that gap. I just don't know how long it's gonna take, but it has to fill that gap.
But the thing is, so this day was the CPI print, right?
Right.
This stock has never. I don't see a decent setup inside this. All of this, right? That's hard. And then the gap. Oh, that gap isn't on earnings. So why did it gap up a couple days before earnings?
I think, based off of, that's a really good question. So I'm not sure what news, because it definitely did. And then when earnings came out, it pushed it up even more, because apparently it surprised, earnings, it blew through the water. Or at least, which you can kind of see. But I'm not sure what made the gap up initially. That I'm not sure.
Yeah. It's it's just a little bit technically messy for my liking.
That's fair.
Yeah. And then, here you've got this really nice bull flag. It's not that tight. Sloped down enough, but then that bull flag failed.
Got and then just out of the shot back up. Yeah.
But it did bounce right off the gap. Right. So some of the technicals are working in this and some aren't. So when I see a stock like that, anything I see, any patterns I see in a stock like that are kind of questionable.
I got you. That's fair. I appreciate that.
Yeah. I see Pearse, or Pearse actually left. He says he's at work, so he can't really participate. Hopefully Pearse will come back and watch the recording, because I see him asking, says he's curious what industries, specific stocks you might have on the radar to trade. And the answer to that question is, for today, not much, because when we get what has happened over the last 2 days, because we had a down day yesterday, and then a big down day today. It's kind of a big reset. So any of the stocks that we're setting up, those setups are probably now broken. So we kind of have to, start looking all over again. Some of the things I had been looking at, and also at this time of year, a lot of we're in the peak of earnings season, so many stocks have earnings coming, and a couple of the stocks we were looking at over the weekend, one of them was GOGO, and I really liked the consolidation on this one. You can see that right here. Let me get that in there. Highlight this. I was loving this consolidation, and I was hating their earnings are coming up. And now earnings are tomorrow in this one. Now this is another one. This is weird. I mean, a couple of days from earnings, and it gaps up out of that consolidation. If we hadn't had earnings coming, well, actually, I wouldn't have been able to buy this because it just gapped up too much. This is a bull flag. This is the kind of play I like. I don't like them when they gap that much. If it had moved up slowly out of here, and I actually might have bought it on this big green day as it moved up out of there. But anyway, it's got earnings coming up tomorrow after making this move. So I think it still might be worth, taking a look and see what happens after earnings. How do you play that with earnings in a couple of days? Same goes for Hood. I liked the setup in Hood. And this has got a long-term setup here. This rounding bottom, and then we've got this strong resistance here, and a more recent bit of an uptrend. It's all tightening up in here, right? And to break out right where it should. But earnings coming, right? And it broke out a couple of days before earnings. Well, nobody's going to buy that. Some people did, but you're not going to have a whole bunch of people jumping in there. I'm not going to jump in that, even though I've been watching this for ages, waiting for this to happen. No, it's too close to earnings. So this had earnings after hours today. But you can see that, after this breakout, well, of course it failed. I don't think it was even going to need the Fed to make it fail. It failed because earnings are coming, and you can't buy this breakout then. So we got earnings today. Let's take a look intraday and see what happened. So I haven't actually looked at the numbers or anything like that, but I can tell the numbers must have been pretty decent. Because it spiked up on those numbers, but not awesome, obviously. And it's kind of settled in and started moving sideways, and just we're basically staying right on that breakout level. So what do you do now? I guess you keep an eye on this, and hope it sets up again. Because right here, I mean, even these 2 days, we're a half decent setup. But I think we need some more sideways action, and hopefully we get a consolidation, and then we can buy a breakout of the consolidation. But this is now a few days away. I think Micron was trying. No, nothing going on there. So I basically. Okay, cool. Oh, that's a pretty decent beat. Expecting a 20-cent loss, expecting a 29-cent loss, and only had a 20-cent loss. That's not bad. So anyway, Pearse, we need to kind of look at things again, and I'll be doing that over the next couple of days, and hopefully in the weekend update, I am able to find some setups. Maybe things settle down in the market by then, and we'll either have set up some short sale setups, or maybe hopefully I'd much prefer setups to the long side. So watch the weekend update, and with any luck, I've got something for you. Someone's angry. All right, a little road rage going on outside, if you can hear that. Ken has asked, can we look at MAXR? We certainly can. Ken thinks that, let's bring that chart up. So Ken thinks that he might try to get out of this one, okay? Share price around 22.50. They also have earnings tomorrow, and it makes me a little nervous. that I might go down after. All right. Yeah, I mean, we should kind of always be nervous coming in. So what do we got? We got a 33-cent estimate on that. Last time earnings were minus 40 cents, minus 9. Their earnings are all over the map, aren't they? Wow, minus 9 cents, and then it was almost $1 before that. Huh, interesting. Okay, should probably delete this gap. Wow. Get rid of that. That's been filled. Okay. There should be right off of that and that and that. Yeah. I want to get this other line in here. Right off of this. Okay. That line didn't do much recently, but yeah, I mean, this is one of those small cap stocks that I didn't like. Small caps got hit really hard today. This is a small cap stock. This had been doing pretty good coming off the bottom though. Yeah, I don't know. If you're worried about earnings, I mean, because bad things would happen, and it could completely break down. And obviously, earnings trump technicals usually. Yeah, tough call. Tough call, because it made a nice move off the bottom. Not sure what that was all about.
Yeah, and Kevin, just to give you a little bit more background, I've been actually holding this one for I think a year and a half now. So it's kind of like a long term one for me.
2250 back over here somewhere.
Yeah, I was all the way back there.
Okay.
And I've been holding this one, and I think I previously had you look at this one too. I should have sold at the 40 when it was in June, I think. I think it hit 40. Oh no, sorry, in April. Wait, is it April? Yeah, I think April it hit 40.
Up in here, yeah.
Yeah, I think I should have sold there.
Yeah.
But now that the market has taken such a huge downturn, and I see that there's better opportunities elsewhere.
Right.
I'm just trying to think about just getting out this one and then putting my money elsewhere.
Yeah. Okay. Yeah. Why does it keep doing that? It's not the line I want. Yeah, look at that, eh? All right, let's get rid of these ones. Yeah, this could easily go much lower, but whether it goes below this pivot is hard to say. It's a bit of an earnings crapshoot. So I mean, you get out now, you get out with a small loss.
Yeah.
How much worse can that loss get from here? So we're at 21. Come back to 17 or 18. You don't want to see it come back to 18. You want to take another $3. And if it comes down below there, but there is still there should be pretty decent support even below those levels. But yeah, if you've got other opportunities to look at, this one has been pretty weak, but only recently got stronger.
Yeah.
But if everything that's happened with the Fed is kind of erased, the last month's worth of price action, or is going to erase the last month's worth of price action, then yeah, this is probably one to exit.
Yeah. Okay. Sounds good. Yeah. I think I might just wait to see what the market does tomorrow first, and then yeah.
You know, because I know we were talking earlier, you know, before we started recording and everything, that you know, some of the ideas that we had about what might happen. And like I said, you know, earlier, I think we get a little gap down tomorrow, but I think we're going to find some buyers, right?
Yeah.
You know, buyers have been coming into this, and we've been putting in higher lows. So you know, maybe this is another higher low.
Yeah.
But earnings are such a
Unpredictable. Yeah.
shoot. How does this, you know, does this thing surprise up, down?
Yeah, I was actually looking at the past history too. Well, the previous one that we just had, the most recent one, it went down.
Yeah. So you got two. See, this one's weird, right?
Yeah.
You go back to February of this year.
Took a big dip and it went up.
And
Yeah.
then right back up again.
Yeah. It shot up too, like the next month. Yeah.
Yeah. So this one was good. You had a nice gap up, gap up after earnings. This one you have a gap. It's like it's all over the map.
Yeah.
Some are nice moves up, and some are ugly moves down.
Yeah. I think this one's a little bit hard to tell.
Yeah.
And there are times when, you know, companies report bad earnings, but they end up going up. There are times like that too. So I feel like it's always hard to gamble on earnings.
Yeah. It's interesting that they're moving from a loss into profitability this time around.
Right.
And so that almost, you know, that's a suggestion to me that their guidance should also improve.
Right.
And that could definitely make the stock go up.
Yeah, I agree.
Yeah. I mean, I don't know.
Yeah. I was thinking that, yeah, you know what? I've been holding on to this one for quite a while now. So I might as well just hold through it and see how it goes. Yeah.
That, or maybe, you know, maybe hold half.
Yeah. Or that too, yeah.
It doesn't have to be all or nothing, right?
Yeah, reduce my position.
We've had this. This is good. When I see this kind of bottoming action here, it's healthy. We've seen it in a lot of the indices lately, and we've seen it in a lot of individual stocks that had gotten really ugly.
Yeah.
You know, if you compare this to we were looking at LC earlier, right?
Yeah.
You know, look at the difference in the recent price action between the two.
Yeah.
You know, one of these things is kind of not like the others. This is definitely showing better price action, right?
Yeah.
So,
and I also feel like today's price action is just kind of like an outlier, just because the Fed, you know. But
yeah,
who knows what it would have been like if the Fed didn't speak today, you know.
Yeah, well, like I said earlier, you know, I do, you know, part of me really thinks this is a bit of an overreaction here.
Yeah.
And you know, there are other pieces of the market, you know, like I said, with the bonds and everything, they're not giving us the same sort of result or the same price action out of the bonds. They're not telling the same story. So, yeah, this story is still it's still being written here. You know, we don't have information yet, or price action anyway, to make a decision.
Okay, sounds good. Thanks, Kevin.
Well, yeah, you're welcome. All right, I think we've been through everybody's in here, so let's see. Let's take a look at. I've got the November calendar. Got that done today. And we are, next week, we're going to do Ticker Talk. And then the week after that, we are going to do a little educational session. I'll probably do a really, really quick little market update at the beginning of this. But mostly it's going to be a educational session. We'll do like half on Bollinger Bands. And we'll do half on Fibonacci retracements and possibly extensions. And then, you know, the rest of the month will be Ticker Talks on Wednesday, as usual, and then the weekend of recordings. And then, Justin, the thing you wanted to do, you know, what do you need to have in place to become a full-time trader? We'll do that in December.
Sweet, sounds good. Just in time for the holidays.
Yeah. So there we go. And what else have I got? Yeah, I just want to thank everybody for coming out and watching. and hope everybody enjoys the rest of their evening. And we'll see you guys tomorrow, and hopefully we see a little bit of a recovery